A single ETF has never moved XRP more than a few percent. But today, after the fifth ETF launch, the invisible forces shaping XRP's price may finally hit their strongest point yet. This moment isn't just another headline, it's a structural shift. And what happens next may surprise even experienced traders. In the next minutes, you're going to discover the realistic high and low scenarios for XRP now that institutional demand has opened a new door. More importantly, you'll learn why one price zone almost no analyst is discussing may become the most influential level of 2025. The biggest opportunities are often the ones hiding in plain sight. Before we dive in, here's a challenge for you. If you had to bet on one single price zone for XRP, just one, for the next major move triggered by today's ETF launch, what would you choose? Drop your guess in the comments and let's see how close you are by the end of this breakdown. Now let's begin. What if the fifth ETF is the one that actually matters? Most people assume the first ETF has the biggest impact, but the market rarely works that way. Historically, crypto assets react more aggressively when their ecosystem becomes ETF dense. Every additional ETF adds more liquidity, more arbitrage, and more exposure. It's like completing the final piece of a machine. Marginal liquidity doesn't create smooth progress. It creates sudden, nonlinear jumps. So don't judge impact by sequence. Judge it by density. More products, more pressure, momentum matters. Here's something counterintuitive. The biggest XRP moves often start with tiny institutional inflows, so small that retail traders barely notice them. We saw it with Bitcoin in 2024 and Ethereum in 2025. A few $1 million in early ETF inflows led to micro rallies, which later turned into major expansions as momentum built behind the scenes. Quant desks track this closely using short-term flow data, especially the 24 to 48-hour window after launch. Today's new ETF increases the number of inflow channels by about 20%. That's not small, it's structural. So watch net inflows in the first two trading sessions. They tell you where momentum is forming before the chart shows it. Now imagine this. XRP suddenly breaks above a resistance zone that hasn't been updated on most charts since 2021. These quiet, forgotten areas, what some traders call ghost pivots, contain trapped liquidity, unfilled orders, and old biases. When fresh ETF-driven volume collides with these zones, you often see sudden wicks, violent breakouts, or liquidity hunts. It's not magic, it's just overlooked liquidity. That's why identifying your ghost pivots can give you an edge. These neglected levels often trigger the most explosive reactions. Hidden zones matter. A trader once told me he ignored a minor ETF thinking it would have no significant effect. 3 days later, that asset pumped 70%. Not because the ETF itself was huge, but because the launch collided with a liquidity vacuum in the market. He missed the entire move, not because he was wrong, but because he underestimated the environment. This is called ETF fatigue bias. After a few launches, traders stop paying attention, but the market doesn't. Treat every ETF as a standalone event, especially the later ones. No autopilot. Let's talk about the mechanical side of ETFs. Most traders overlook it. An ETF doesn't just buy the underlying asset. It also creates predictable arbitrage patterns between the spot market, futures market, and ETF shares. This often stabilizes price for a short period before volatility kicks in. It looks like nothing is happening until the range breaks. So expect stability first, breakout second. Accumulation is usually quiet. Quiet accumulation wins. Here's a deeper question. Does XRP's current price reflect its real demand anymore? Right now, something unusual is happening. Open interest is rising while spot volume is lagging. This divergence is often a precursor to aggressive breakouts. Futures traders lean into positions early, while spot buyers wait for confirmation. We saw the same pattern on Ethereum before its 2025 rally. Track open interest versus spot volume. When they diverge sharply, volatility is coming. Divergences guide. Two truths coexist today. XRP appears undervalued on fundamentals, yet congested on technicals. When these conditions collide, the market compresses, forming what analysts call a coiled spring environment. It doesn't guarantee direction, but it increases the probability of a large move. When fundamentals say up, but technicals say wait, prepare for asymmetric breakouts. Asymmetry is king. Let me give you a quick story. There was a token in 2023 that barely moved after its first 4 ETFs. Traders called it dead. Then the 5th ETF launched, not the largest, not the most hyped, and certainly not the one people expected to matter. But conditions aligned, liquidity shifted, and the asset quadrupled in 6 weeks. The lesson is clear. Markets don't react to order. They react to conditions. Don't underestimate late cycle ETF effects. Late waves explode. Now imagine XRP hitting $1.50 within 48 hours. What happens next? That breakout would reshape the entire 2025 price structure. It would unlock higher liquidity pools, invalidate 3 major bearish models circulating right now, and shift the psychological framework around XRP's long-term potential. It wouldn't just break resistance, it would reset expectations. When you analyze the chart, look for validation clusters, moments where multiple signals confirm a breakout. Signals stack. An institutional analyst put it best. ETFs don't move markets through hype. They move them through flows. Sentiment gets attention, but flows move price. Today's ETF adds a new lane of capital. Even slow inflows compound over time. That's how markets shift. Track flows, not tweets. Flows dominate. If you want fast, no fluff updates on XRP during the week, hit subscribe. This channel gives you the sharpest XRP analysis available online, so you can react before the market does. Now let's take the second wind. What's the real downside after an ETF launch? Most people immediately look upward, but new institutional products also expose weaknesses in liquidity. XRP has deep liquidity down to a key zone, a safety cushion, not a crash target. Smart traders identify downside zones before fantasizing about upside scenarios. Downside measured. Volatility can rise sharply even when the price barely moves. This happens when spreads widen and market makers adjust risk profiles after sudden institutional volume appears. Retail traders see a flat chart. Professionals see opportunity. Wider spreads mean dangerous entries, but also precision reversals. Avoid impulsive entries in these periods. Wait for spreads to normalize. Protect capital. The next major wave for XRP may not come from the United States. Japan's regulators, EMEA's expanding ETF ecosystem, and South Korea's evolving legal framework could all create new international ETF demand. A second liquidity wave, this time global instead of domestic, could reshape the price entirely. Don't analyze XRP through a single country lens. Global flows matter. 2 opposing forces are pulling XRP right now: growing institutional adoption and persistent regulatory friction. This tension creates narrow windows, moments when opportunity spikes briefly before snapping shut. Markets don't move randomly, they move in pulses. Build a 3-scenario playbook: bullish, neutral, bearish, and know the precise triggers that shift you between them. Prepare ahead. Another story. A forgotten asset in 2022 suddenly became a star after a secondary ETF. Small, quiet, barely noticed, launched unexpectedly. There was no hype and no massive inflows, but the timing aligned perfectly with a liquidity vacuum. The chart went vertical. The market rewards strategic patience far more than constant action. Sometimes the biggest moves happen when attention is lowest. Patience pays. Now let's explore the upside. The realistic high zone for XRP, based on ETF-driven liquidity and historical expansion models, sits between $3.80 and $5.20. This scenario requires 3 catalysts. First, consistent ETF inflows. Second, a clean break above major resistance. And third, international adoption pressure. If these align, XRP enters true price discovery for the first time in years. Track catalyst stacking, not wishful thinking. Triggers matter. A professional investor once told me, ETF accelerators magnify both gains and mistakes. He manages them with 3 layers of protection: break-even zones, neutral zones, emergency stops. Simple frameworks prevent emotional decisions during high volatility. Have your rules set before volatility hits, not during. Rules protect. Now here's your full price spectrum after today's ETF launch, the mental map that can help you navigate the coming weeks. Your downside safety zone, the deep liquidity cushion below. Your neutral coil zone, where compression builds and price waits. Your fair upside range, $1.50 to $2.30. Your aggressive upside, $3.80 to $5.20. And your irrational top, possible only with a global flow surge, starts beyond $7. Trade probabilities, not fantasies. Probabilities win. Today's 5th ETF didn't simply add another product to the market. It added another channel for liquidity, another structural force shaping the next move, and another long-term signal that institutional adoption is accelerating. In crypto, money doesn't move all at once. It moves in waves, and the market rewards those who understand these waves before everyone else. Not professional advice. Consult a qualified expert as needed.